So let's do a deep dive into the Denver real estate market as of August 2026 and address the psychological shift that's happened recently, or the period that I'm calling the rate acceptance period. Things have totally changed as of 2026, and here's what you need to know. So, since 2022, when rates started going up, we saw a lot of people sit on the sidelines. A lot of buyers said, I don't want to buy until rates come back down to the 3 or 4%. We saw a lot of sellers say, I don't want to sell in a higher interest rate environment. I feel like I can get more for my home when rates come down. What's happened is each year we're promised interest rate reductions. All the hopium has built up only to be let down year after year. And as we're going into 2026, and as we're in mid 2026, rather, the talk about interest rates have started to go away, and we're talking more about possible interest rate hikes. Right now, at the recording of this, we're currently still stuck in Iran. There's possible peace talks that are happening, but that's happening every week and it's not working out. Hopefully, something happens soon. But we see the inflation impact that it's having on the economy, and with inflation becomes higher rates. So people have shifted their mindset massively to what I call rate acceptance. People are realizing that this magic rate reduction period of time where we go back to close to COVID rates is probably not going to happen ever again. Or if it does, we're going to get minimal interest reductions for the time being. So, what you're seeing is sellers decide, hey, I really want to move and I'm tired of waiting for this. And you're seeing buyers say, you know what, prices of homes are really not going down much, and I'm tired of being locked out of buying a home. So they're starting to transact too. So we're seeing 2026 start to really unfreeze, and we're starting to see a lot of people want to play in the market again. Now, this is what I'm telling all my sellers in 2026. It is so important for us to figure out which housing market you're selling in. Are you in a neighborhood that's highly desired with low inventory, and we know we're probably going to get a bidding war? Or are you in a neighborhood flooded with inventory and hard to find buyers, and you see price reduction after price reduction? These two different categories are vastly different and have to be handled completely different. Now let's talk to my lucky sellers in a neighborhood that people are dying to get into with low competition. What I always tell sellers is don't take it for granted. You cannot half-ass any part of the marketing when you're trying to sell your home, even if you're in a market that favors you or a neighborhood that favors you. If there's simple remodels that you can afford to do that are going to give you top dollar, you still want to do this. You have to get the photos looking perfect. So before photos and videography and things like that, the home has to look absolutely perfect. Now, my sweet spot of selling a home in Denver, Colorado is the first 2 weeks. During that first 2 weeks, especially the first week, you're going to get flooded with showings. And if you are in a neighborhood that's highly desired, it's not uncommon to get 5 to 6 showings a day, and that can almost be every day. The problem is if it doesn't sell within that first 2 to 3 weeks max, then you have a problem, because what happens is we start to see a steep decline in the amount of showings and interest in the home. It seems like it's the new exciting thing on the market. Everybody is looking. And then when that excitement fades away, you see a lot of the activity fade away. I get the most that I can out of a house within that first 2 weeks. And you really have to listen to the market. If you're getting flooded with showings, we did something right. If you hear crickets and nothing's happening, we priced too high, and you want to address that very quickly. Now let's talk to my people who are in the unfortunate situation of being in a less desirable neighborhood, or a neighborhood that's still desirable but has a ton of inventory and competition. For you, it's even more important to price strategically. You do not want to get caught up in your neighbor's battle of price reduction after price reduction. I have so many people that want to start the philosophy of we'll start super high and we'll keep decreasing. That is the absolute losing strategy. When people see that your home has had 10 different price decreases, buyers start to wonder what's wrong with your home. And there may not be anything wrong with your home, but I get so many buyers that see that and they say, I don't think I want to see it, because if they've had to do that many price reductions, there must be something wrong with the home. Amount of time on the market is not your friend. And especially if there's a ton of competition out there that you have to fight against, it's a race to the bottom. So rather than saying, I'll start 30,000 higher and go to my lowest, you're much better off starting at close to where you have to get or what you're willing to accept. Now, if you ended up underpricing that and you priced it too good, the market's going to correct you as well. So you're going to get a flood of activity because you priced it super conservatively. And there's a chance that you at least get full asking price. And in many cases, you get above asking price. But do not, for both categories, do not price your home and with the philosophy of I'll start super high and end up low. The problem is everything has a digital footprint. Everybody can see how long this home's been on the market and how many price reductions you've done. Also, as we're talking about price reductions, moving a $600,000 home down $3,000 is going to do you no good. All it's doing is ensuring that you're going to have to do many more price reductions. You got to remember that every $10,000 of a price reduction saves the buyer about $60 on their mortgage. So as you reduce it $3,000, it's saving them pennies. It's not going to do anything to save your home's marketability or do any miracle work there for $3,000. You have to do a real price reduction. So we've had a ton of predictions that there's going to be a housing market collapse, and I can tell you it hasn't happened, and I don't foresee it happening. The reason that caused the '08 crash was the lack of accountability in the lending sector, and now it's really regulated and it's much harder to get a loan. They scrutinize loans a lot more. So I don't see that happening. Right now, even with the worst interest rate environment, you still see homes selling, and you still see buyers out there actively buying. And so we're not seeing any indications of that. But like I said in the start of this video, we are seeing a psychological shift of people being tired of sitting on the sidelines, waiting for rates to come down. There's only so much that the Fed can control when they're fighting inflation. And the Fed's goal is to always lower rates and have a great environment. But right now, as we're stuck in this war and inflation is high, way higher than what we're supposed to be at, you're not going to see interest rates come down anytime soon. The only thing that can shift that, which isn't all good, would be a major recession. If we were to see a major deep recession, you could potentially see rates fall dramatically. However, that carries its own problems separately from getting low rates. Of course, the low rates would be good, but we're in a much more problematic situation if we go into a deep recession. So now the question is it time to buy or sell? Well, only you can answer that. You know your situation. Don't listen to anybody that tells you it's the right time to do anything. You need to decide that on your own. What I can tell you is if you're a seller in this market and you're going to buy in this market, if you don't sell for as much as you want to, that typically means when you go to buy, you're also going to get a good deal. During COVID, when the housing market was insane and anybody could get what they wanted for their house, it was great when you were selling. However, as you got multiple offers on your home when you were selling, when you went to buy, you were also fighting all that competition. So what I tell people is if you're selling in a good or bad market, it's a wash as long as you strategically buy your next home. If you're going to take a little bit of a hit selling your home, you need to make sure that you make the next person take a huge hit when you go to buy. Now, if you're a buyer and you're deciding whether to rent or buy, again, only you know that. What the right time is for you. I can tell you that if you plan on only being there short term and your plan is to live there 1 or 2 years, I can tell you rent is almost always better. It's super hard to predict the housing market and you don't know for sure that you're going to make enough equity in that short amount of time. Real estate is a longer game. So if you're going to stay there 5+ years, and your goal is to stay in that home for a decent amount of time, then buying might be the right option for you. I'm always happy to discuss this and we can weigh out your pros and cons for doing either. I'm here as a resource for you. Please like and subscribe for more housing tips, and I look forward to seeing you on the next one. Thanks.